Well, Ross, today Hong Kong's market was mostly weaker, but got plenty of support from debutantes today. The IPO of a shampoo maker named BAWANG was oversubscribed by 450 times. Another newcomer, China Chinfa's listing, was oversubscribed by nearly 100 times. And joining us now to discuss the IPO market in both Hong Kong and China is Dariusz Kowalczyk, Chief Investment Strategist at SJS Markets in Hong Kong. Well, great to see you, and thank you so much for coming in on this Friday. First of all, so tell us why this shampoo maker is so sexy to investors.
Investors generally are very interested in any IPOs coming out of China because regardless of the industry where the companies operate in, the growth outlook for the Chinese economy is so convincing and there has been relatively little new IPOs so far this year, so supply has been very limited, that people are basically jumping to purchase anything that begins to come out. And that's why whether you talk about this particular issue or the IPO of a pharmaceutical company in Shanghai last week, the number of times by which the subscription is oversubscribed goes into a few hundreds. And I think that this climate will continue for a while, having a positive impact on the overall market in this part of the world.
Now, these two IPOs that we're talking about, Darius, BAWANG and also another coal company, are certainly very much hot in demand. They may be among the 100 companies that may be looking to list in Hong Kong this year. Now, what would be your investment strategy? What should investors look out for when they select through these IPOs?
Definitely need to be very careful in terms of the valuation at which the company is offering its shares. And number two, what kind of industry it operates in the domestic market. Is it one of those that the government is trying to support, is going to benefit from increase in domestic demand and consumption or investments in particular or not? If yes, then there is a very good chance that it will become a hot stock after the IPO and that it will enjoy a healthy pop.
Hey Darius, it's Ross here. Just looking at the wider Chinese market, I mean, the performance statistics, we have to remind ourselves, are pretty startling here. The Shanghai Composite up over, what, 68% year to date. At this stage, can we continue moving up, or is this a point where investors should expect, you know, people taking money off the table?
I believe that the Chinese market has moved ahead of its fundamentals. And it's increasingly risky to put more money into it. But at the same time, there are several drivers of the rally that still haven't disappeared. First is that the Chinese economy continues to exceed expectations in terms of how fast it's growing. Our forecast is that in the second quarter it will expand by 7.5%, and the same number will be reached for the entire 2009, making it the best performing economy. And you cannot discard that. This is happening in a very dramatic environment globally, showing that Chinese policymakers are able to boost growth, and this improves long-term earnings potential for Chinese stocks. And finally, you have this huge liquidity related to bank lending, some of which is going into the equity market. All these factors are still in place. So I think that despite very high valuations, there is still at least 10% upside over the summer.
And you just talked about bank loans, and already we're hearing by the year end, bank lending could reach 10 trillion yuan. Should we be concerned about bad loans coming out of China? After all, the authorities there already did urge banks to exercise some supervision.
The issue of bad loans is going to come back later on. And next year, I think people will be more worried about increase in the bad loan ratio. But there are two mitigating factors. The first is that a lot of these loans are going to government-orchestrated investment projects. So there is some sort of government support for what will become of these projects and what will happen with the loans. And number two, it will take time for those bad loans that will show up to actually materialize. And in the short term, investors are definitely not concerned by that. They are still looking on the bright side.
Okay, so it looks like based on what you're saying, the IPO jitters pretty much are factored into today's market price. Thank you so much for coming in and have a great weekend. Dariusz Kowalczyk.
Thanks for having me.
Indeed, Chief Investment Strategist at SJ.